All right, so let's dig into all this market news you've got here. Looks like you're really trying to get a handle on what's happening globally as we close out 2024. We've got, let me see, the Wall Street Journal, Bloomberg, Market Watch, even CNBC. Wow, it's like a whole financial news choir.
It really is a symphony of market chatter, isn't it?
Yeah.
And the conductor leading the whole orchestra, none other than the Federal Reserve. They've got that big interest rate decision coming out today.
Yeah, it really feels like everyone's just holding their breath, waiting to see what the Fed does. If they cut rates again, that would be what, the third cut this year?
Third one, yeah.
But I'm really curious about what kind of hints they might give us about 2025.
Ah, yes. That's the real billion-dollar question. I mean, a rate cut today seems pretty much guaranteed. The markets are pricing in like a 97% chance. But what the Fed's going to do next year, that's much less clear. There's a lot of chatter that they might signal a more gradual approach to cuts in the future. Or, get this, they might even hint at hitting the pause button as early as January.
Wow, really? So why would they pump the brakes now? I mean, isn't inflation still a pretty big concern?
Well, inflation has been cooling down, which typically, makes rate cuts more likely.
Mm.
But here's the interesting thing. The U.S. economy is proving to be pretty resilient. It's almost like it's telling the Fed, hey, I don't need quite as much help.
So the Fed's stuck between this rock and a hard place, huh? Keep inflation under control, but don't, choke off economic growth. That's got to be tough. It's such a delicate balancing act.
Exactly. And if that wasn't tricky enough, we've also got President-elect Trump's policies coming into play, and nobody's quite sure how those are going to impact the economy just yet. So it's a bit of a wild card for sure.
Yeah, sounds like the Fed could really use a crystal ball right now. So how are global markets reacting to all this uncertainty? Are people freaking out?
I'd say it's more like they're holding their breath and waiting to see what happens. The U.S. dollar, for example, has stayed fairly stable against other big currencies like the yen and the euro. It's almost like everyone's waiting to see which way the Fed jumps before they make any big moves themselves.
Yeah, okay, so kind of a tense standoff. But what about other indicators? Like what's gold doing?
Well, gold has actually perked up a bit. It seems like some investors are thinking that if we do get those lower interest rates after the cuts, gold's going to become a more attractive investment.
That makes sense. I mean, gold tends to do well when other investments are looking a little shaky. What about how's the oil market reacting to all this?
Oil is playing it cool for now, trading in a pretty tight range. I think traders are just glued to the news, waiting to hear what the Fed says about future rate moves. And then you've also got those new sanctions against Russia's oil trade, which, well, that always adds another layer of unpredictability, doesn't it?
Oh yeah, for sure. So lots of global nail biting happening over this Fed decision. But back here in the US, we've got another story making headlines. The Dow Jones is on a major losing streak, like 9 days in a row. That hasn't happened since, get this, 1978.
Yeah, it's definitely a noteworthy dip. And it could signal that things are starting to change. One factor is that fewer stocks are participating in the overall market climb. That's what they call narrowing market breadth. And it can mean the rally is running out of steam.
Oh, I see. It's like a party where fewer and fewer people are dancing. Not a good sign. But I thought I read that one company in particular was kind of dragging the Dow down.
You're thinking about United Health Group, right?
Yeah, United Health Group.
They've been having a rough time lately. Lots of political pressure to, dismantle their pharmacy benefit manager business. That's a big headache for them.
And then there was that tragic killing of their insurance arm's CEO. Just a terrible situation.
Absolutely.
But besides all that, I thought rising treasury yields have also been a factor in the Dow's decline.
Oh, absolutely. Rising treasury yields driven by those inflation fears and the expectation of fewer rate cuts, that's definitely putting downward pressure on the Dow. And it's hitting those value-focused sectors especially hard.
So is this a sign that the market's about to just completely nosedive?
Well, that's a million-dollar question, isn't it? It could be a natural correction, after that post-election rally. Kind of a chance for the market to, catch its breath.
Yeah.
But it could also be the first sign of, well, a bigger storm brewing. I guess we'll just have to wait and see what happens over the next few weeks. But hey, enough about the Dow's drama. Let's talk about something a little more exciting, a potential blockbuster deal that's sending shockwaves through the whole auto industry.
You're talking about those Honda-Nissan merger rumors, right? Now that's what I call a mega merger.
Yeah.
That could create the world's third largest automaker. It's like watching a real-life game of Monopoly, where everyone's trying to build the biggest empire.
It's definitely a fascinating development, especially for Nissan, which has been, well, they've been wrestling with some pretty significant financial problems. declining profits, job cuts. They really need a game changer. And this merger, well, this could be their lifeline.
Yeah, but didn't I see something about another player wanting a piece of the action? Something about Foxconn, that Taiwanese electronics company. Like, they were interested in Nissan.
You're right. There have been reports that Foxconn approached Nissan about getting a stake in the company. They've been pouring money into building those electric vehicle factories. So their interest in Nissan makes a lot of sense. And, their involvement could really add fuel to the fire, potentially speeding up those Honda-Nissan merger talks.
Wow, that's interesting. So if this deal actually happens, wouldn't that give both Honda and Nissan, I mean, wouldn't it give them a much bigger advantage in that electric vehicle market? And plus, they'd have the muscle to compete with giants like Toyota.
Oh, absolutely. A combined Honda-Nissan. That would be a force to be reckoned with. But merging two giants like that, it's not going to be a walk in the park. Think about the challenges, blending different company cultures, streamlining operations. It's a huge undertaking.
Definitely not as simple as just plugging two things together and hoping for the best. It'll be fascinating to see how they handle it.
High-stakes game with a lot riding on the outcome. But speaking of high stakes, let's switch gears for a minute and talk about a company making waves with a very different kind of gamble.
You mean MicroStrategy, that software company that's getting ready to join the NASDAQ 100. And all because of their huge Bitcoin holdings. Talk about a bold move.
That's a pretty unusual story, isn't it? They've gone all in on Bitcoin, even using leverage to, really amplify their returns. It's gotten to the point where some people are saying they're more of a Bitcoin holding company than a software company these days.
Wow. So they're basically betting the farm on Bitcoin, huh? But isn't that a little risky? Especially for a company that's about to be on the NASDAQ 100? I mean, that index is usually for, more traditional non-financial companies.
Right. It's definitely breaking the mold.
Yeah.
And some experts are worried about, about the potential ripple effects, especially for other investors in the index. Like, what if Bitcoin crashes? MicroStrategy's valuation could plummet, and that could potentially impact the entire NASDAQ 100.
Yeah, that's a good point. It's a high-risk, high-reward kind of play. What strikes me is that we're seeing a lot of lines getting blurred these days. A software company becomes a major Bitcoin player. Car companies are merging just to survive. It's like the old rules don't apply anymore.
You've hit on a key point there. This is a time of massive change, and being able to adapt and innovate is more crucial now than ever before. The lines between different industries are becoming more and more fluid.
So for our listener out there who's trying to make sense of all these market upheavals, what does it all mean for them?
That's a great question. And it leads perfectly into what we're going to discuss next. We'll explore the potential consequences of all these market trends and how they might impact your investment decisions. Stay with us. We've got lots more to unpack.
Well, you're right. It does seem like the global markets are in this kind of tug of war right now, all these different forces pushing and pulling every which way. And yeah, the Fed's decision today, it's like dropping a pebble into a pond. Those ripples are going to spread far and wide.
Yeah. It's kind of like a domino effect, right? One decision triggers a chain reaction across markets and industries. I guess that's what makes it all so fascinating and a little bit nerve-wracking too.
Exactly. And for you as an investor, well, understanding those connections, how they could impact your own portfolio, that's vital.
One thing I'm picking up from all these articles is that there's this underlying sense of unease. Like, even with the market's recent highs, there are these little warning signs flashing about potential overexuberance. I mean, some people are even talking about a bubble. Yeah, it wouldn't be the first time, would it? And there are indicators that are starting to, kind of blink red, like Bank of America's cash rule, for example. It suggests that when professional investors get too optimistic, well, it can often be a sign that a market dip is coming. It's like the canary in the coal mine.
So are we talking like a full-blown crash here? Should I be stuffing my money under the mattress?
Whoa. Let's not get ahead of ourselves. Market timing. That's a really tricky game. Trying to predict exactly when the market will peak or plummet, well, that's practically impossible. It's a fool's errand, really.
Okay, so no need to panic just yet. Phew! But then what's a smart investor supposed to do with all this uncertainty swirling around?
Well, that's where a balanced and an informed approach comes in. Think of it like building a house. You need a solid foundation, right? And in investing, that means having a well-diversified portfolio.
Right. Don't put all your eggs in one basket. Spread the risk around. Stocks, bonds, maybe even some real estate or commodities.
Exactly. Diversification helps you, kind of cushion the blow if one sector takes a hit. But beyond just spreading your bets, it's also important to think about those bigger trends that are shaping the market. For example, technology continues to be a major driver of growth, especially with, all the advancements in artificial intelligence. Yeah, AI is huge right now.
Yeah.
But hold on, didn't NVIDIA, one of those big AI chip makers, didn't they just have a pretty rough quarter? Doesn't that make you a little cautious about the tech sector?
It's a good reminder that even the hottest sectors can cool down. The key is to be selective. Don't get swept up in the hype. Look for companies that have strong fundamentals, consistent earnings growth, a real competitive edge.
So a healthy dose of skepticism when it comes to tech. Got it. Are there any other areas of the market that are looking particularly promising?
Well, value stocks. They've been kind of overshadowed by growth stocks for a while now, but that might be worth another look. They tend to be more sensitive to economic cycles. So if we see a global economic upswing, well, value stocks could do quite well. So a mix of growth and value stocks, kind of like a balanced diet for your portfolio.
It's a strategy worth considering. But remember, there's no one-size-fits-all answer in investing. The best approach is to tailor your strategy to your own personal financial goals and your risk tolerance.
Right. Don't just blindly follow the crowd. Make smart choices that fit your own financial roadmap. Speaking of choices with big implications, let's get back to that potential Honda-Nissan merger. If it actually happens, that shakeup in the auto industry raises some really interesting questions for investors.
It's a bold move, no doubt about it. But like we talked about earlier, merging two huge corporations, it's a monumental task.
For sure.
It's going to be really interesting to see how they handle all those challenges, like blending company cultures and integrating technologies and just making sure everything runs smoothly. From an investor's standpoint, there's just key things to consider.
Like, will it actually save them money? Will the combined company be more efficient? Will it help them get a stronger foothold in that EV market? And how will they compete with Toyota, especially since Toyota's been making some pretty aggressive moves lately?
Those are all excellent points.
Yeah.
Ultimately, the success of this merger, at least financially, it's all going to come down to whether it creates long-term value for shareholders.
Yeah, it's a big gamble, that's for sure. Investors are going to be watching every move they make very, very carefully.
And speaking of gambles, let's not forget about MicroStrategy and their big bet on Bitcoin. Their decision to join the NASDAQ 100, it certainly sparked a lot of debate.
It's a fascinating example of how these disruptive technologies like Bitcoin are shaking things up and blurring the lines. Who would have thought a software company could basically transform itself into a Bitcoin powerhouse?
It also shows how Bitcoin is becoming more and more accepted among these big institutional investors. Having MicroStrategy in the NASDAQ 100, it could really legitimize Bitcoin as an investment and attract even more capital.
But there's also a downside, right? There are concerns about the potential risks, both for MicroStrategy and for other investors in the index.
Definitely. If Bitcoin's price were to, really take a nosedive, it could have a ripple effect. It could drag down MicroStrategy's valuation and even impact the NASDAQ 100 as a whole.
It's a good reminder that even in today's world, with all these big established companies and indexes, nobody is immune to disruption. Investors need to stay informed, stay adaptable, and maybe even be a little bit rebellious in their thinking.
Couldn't have said it better myself.
Yeah.
It's a time of incredible opportunity, but also a lot of uncertainty. Staying ahead of the curve means you got to have a thirst for knowledge, a willingness to embrace new ideas.
Absolutely. So as we wrap up this part of our deep dive, I want to leave our listener with something to think about. In this age of rapid technological change, where the lines are blurring and the old rules are being rewritten, what other unexpected shifts might we see on the horizon?
What other seemingly impossible combinations or strategies might pop up? What other conventions will be challenged? Those are great questions, and we're going to keep exploring them in our next segment.
I know, right? It really makes you think. Just a few years ago, Bitcoin, electric vehicles, people thought that was all fringe stuff, like something out of science fiction. And now look, they're turning whole industries upside down. It's incredible.
Yeah.
Makes you wonder what else is coming down the pipeline.
Well, it shows you just how fast things are changing, We can't just sit back and assume the future's going to be like the past. Got to keep our eyes open.
That's why I love doing these deep dives. You get to step back from the day-to-day headlines and really dig into the things that are, shaping the world, connecting those dots, uncovering those hidden patterns, challenging our own assumptions.
Exactly. It's all about developing a more, a more sophisticated understanding of how things work,
Hmm.
right? And that helps us make better decisions, whether it's in our own lives or, as investors.
It's like we're building this mental map of the global economy, piece by piece, deep dive by deep dive. And the more we learn, the less intimidating it all becomes.
It's a journey, a constant journey of discovery.
Yeah.
And you never really stop learning. But every step we take, it makes us more informed, more adaptable, and, better prepared for whatever comes next.
So as we wrap up our deep dive into the global markets today, I want to leave our listeners with one last thought. In a world where, well, where companies can become Bitcoin giants and car companies are merging just to stay alive, what other crazy combinations or strategies might we see?
Right. Like what other lines will be blurred? What other things that we think are impossible will suddenly become, well, possible?
Exactly. It's an exciting time to be following the markets, that's for sure.
Definitely is.
Hmm.
But remember, the future belongs to those who are curious, adaptable, and willing to embrace change. Those are the folks who are going to thrive.
Absolutely. So, to our listeners out there, keep your eyes open, keep your mind flexible, and never stop learning. That's the key to not just surviving, but truly flourishing in this time of extraordinary change.